Welcome to Drill Down Earnings. We have quarterly results out from Mongodb. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research, where we look at the 50 most important companies in technology. Mongodb is definitely one of the 50 most important companies in technology in New York City. It's a giant database company in New York City. Yeah, really interesting company here. And when we look at this company, Q1 2026 earnings, fiscal 2026, better than Wall Street expected, specifically doing the expectation was $527 million in revenue. I look at my model here and it tells us they did $549 million in revenue in the quarter, better than expected. Earnings per share also better than expected. And revenue growth staying really strong here. So revenue growth has been slowing down for this company. Now it's kind of picked up, hanging in there about 22%, pretty strong for this company. There were some real concerns coming into this, but I mentioned $549 million in revenues in the fiscal first quarter of 2026. Gross profits of $391 million in the first quarter. It's a 71% gross profit margin. You'd expect something awesome for a database company, and it's certainly doing that. And their losses, not too bad. Operating losses, margins of negative 7% for this company, but growing in the right direction here. Let's go through some specifics here. We can dig a little bit deeper. So the MongoDB Atlas, that's their big business there, rose 26% in the year-over-year business, now 72% of total revenues. Very impressive. And adding 2,600 customers in the quarter. That's the most of any quarter in 6 years, bringing the total to 57,100 customers for their Atlas product. And like so many companies in software, they've been finding ways to integrate AI. In their case, Voyage AI retrieval models, launching a model context protocol server that enables natural language database integrations with tools like GitHub Pilot and Claude to work again with the developers as they're developing and as they're actually using the database. And it seems to be working with their customers here. And generating a lot of free cash flow, $106 million in the quarter, up from $61 million a year ago. So strong operating leverage of this company. They're using that money to buy back shares, 800 million shares in repurchasing authorized, bringing their total buyback program to $1 billion. They have not put that all to work. And when we think about this business, think about kind of a self-help database, a database for the cloud that is managed by the customers. So as you would expect, a lot of the revenues, in this case, in this quarter, 97% of revenues coming from subscriptions, only 3% services. They're not sending bodies to problems. But the services business has recovered somewhat, growing at 28% on a year-over-year basis. But really the whole business is for this company about what's going on in subscriptions, and the subscriptions business is cranking, 22% growth in subscriptions. So how did the stock react? Well, I think Wall Street was relieved when they saw these numbers. The stock instantly rallying 12% after declining 14% over the course of the last year. It's been very much an underperformer in the last year, but coming back in after-hours trading. And I think it was really about the business initiatives we saw from these guys, but making these databases attractive to more and more customers while keeping a little bit of services revenue there as gravy, but really adding customers, adding AI tools, and having their customers like those tools. Here's what CEO Dev Ittycheria had to say in the conference call.
We still talk to customers who have very near needs for running their business, building new applications to drive operational efficiency, building new products and services through software to take advantage of new revenue opportunities, and to continue to drive more innovation in their business. I think what people find attractive about MongoDB is that you really can use it for a wide variety of use cases. You can support very transactional intensive use cases. You can support more modern use cases, things like IoT, streaming, and so on and so forth, as well as being able to also support some of these more modern use cases like AI. And the fact that you can do this all on one platform where you don't have to stitch together multiple tools, that the underlying architecture is designed to really help you model the real world, to be able to handle complex, nested, and evolving data, to be able to scale elastically, to be able to run these applications on any cloud, across clouds or on-prem, makes MongoDB a very attractive solution.
So there you have it from the horse's mouth. But what is the big takeaway that you want from this? What's the drill down earnings bite, and the one number that means a whole lot, and an earnings summary as well? We've got that. So MongoDB Q1 earnings, Wall Street loves these results. What's the one thing you want to remember? It's not the $549 million in revenue growth, or the fact that revenue growth is in the low double digits here, but recovering for this company. It's the subscription number that's doing that. And the number to remember is $531,455,000 in the quarter in subscription revenue for this company. Again, up 22%, just like the revenues, because Most of the revenues are from subscriptions for MongoDB, but a strong quarter for this company, really showing the growth that I think some people thought that this big New York City database company was losing. All right, thanks for checking out Drill Down Earnings. Make sure you subscribe and follow us. We've got lots more to come.